You know, as you were saying that, I just thought about the Minsky moment, because I think that you're very much responsible for making that term a catchphrase for the Lehman crisis. And as you were saying, you were talking about Lehman, I was thinking to myself about contingent liabilities. That is that, you know, one of the reasons that Lehman happened is because the United States decided actually Lehman is not a contingent liability of the United States government. We're going to let it fail. And then we saw what the consequences were. How much of what's going on in these banks that you were talking about, and also with regard to private debt in China, would you consider to be contingent liabilities of the Chinese central government?
Well, I mean, you could say the entire banking system is a contingent liability because pretty much all the banks are state-owned. So in that sense, to the extent that the government or local governments are called upon to rescue banks, take on their liabilities as part of a merger, or basically hive off some of the assets into so-called asset management companies, which are also state agencies. I mean, the whole thing is a contingent liability. And obviously, because of the accounting regulations, which the Chinese government is in control of, I mean, they can extend and pretend and evergreen, loans and liabilities, for quite a long time. But sooner or later, and I think, one of the arch proponents and gurus of the Chinese financial system is economist that I'm sure everybody's heard of called Michael Pettis, who teaches at Peking University. I mean, he always says, somebody always has to pay for debt. You can't just pretend it doesn't exist. So whether the government's balance sheet deteriorates as a consequence of this, and taxes have to go up in the medium term, or whether we get just extended period of financial repression and low interest rates for households, or corporations basically have to end up shouldering some of the burden of adjustment. I mean, eventually somebody pays for it, and it's a constraint on the capacity of the economy to grow. And maybe in the end, you get, I know it's not very fashionable to look at inflation anywhere, but I'm kind of one of the band of brothers and sisters really that think that actually we may be actually on the cusp of a kind of when I say a new dawn of inflation, I don't want to be overly alarmist, but monetary financing plus supply choke points are kind of a good recipe for a different kind of inflation environment in the next 10 years. So it could be that in China too that this comes about as well. So,
and as you were saying that, I was thinking to myself that the corollary of what you're saying is basically growth has to slow down over time. If they want to get the situation under control from a debt perspective, and there's contingent liabilities, and you socialize the losses, however you do it, as Michael Pettis would say, then that means growth slows. And if you look at 2008 to 2010, the United States and the rest of the world was very much dependent on Chinese growth to move forward. So if Chinese growth is slowing down, and we have a pandemic that's happening right now, amidst what I would say is aggressive monetary stimulus, where does that leave the rest of the world in terms of where it's going to get its growth from?
Yeah, well, yeah, I've always been a bit slightly skeptical about this view that it's one of those things. It's become a little bit like, after the night, the sun shines, so we know that sort of night follows day, day follows night. And the consensus has kind of grown up that we will become dependent on Chinese growth. But actually, if you think about China that has for years been running current account surpluses, by definition, that dependence, China may have accounted for numerically a very high proportion of global growth. But to the extent that it runs current account surpluses rather than deficits, it's actually not a huge contributor to the dynamism of growth in the rest of the world. In that sense, America's current account deficits actually do more, because other countries have the opportunity to export more than they import. So, okay, that may be quibbling a little bit, but yes, I think the point is that if you've been a commodity producer, if you an Australian coal producer or a Chilean copper producer, or if you happen to be, at the sharp end of supplying the Chinese economy with badly needed products, raw materials or intermediate goods or capital goods, then if you're now looking at a China that's going to grow at, I don't know, should we say over the next 10 years by 3 or 4% per annum rather than 6 or 7%, that's a very different environment. And the same goes for the kind of supply chain operations in China, where a lot of China's kind of inputs of kind of semi-manufacturers that are assembled in China and then re-exported basically will be affected by just the lower kind of tone of growth in the world. I mean, we can already see this in the kind of world trade situation. So for 35 years, world trade grew twice as fast as GDP up until about 2008. And then from 2008 until the pandemic, it was kind of more or less in line with GDP. Now we've got a situation where, it's not just that world trade is under pressure from, weaker economic growth and lower productivity, but also because trade restrictions, trade war, who knows where this is going, once phase one is out of the way and so on. So these things will make for a much more constrained kind of commercial environment. I mean, in a way, it sort of makes more appealing the idea about regional trade associations, free trade associations like the successor to TPP, for example, which, interestingly enough, recently Premier Li Keqiang basically said that it might be an interesting idea for China to inquire about joining the CPTPP, which would be rather, it would be interesting. I mean, I think it's very unlikely. I think the Japanese and Indians and Australians would have grave reservations about that. But the fact is that I think it should give us all cause to think about whether this bilateral trade malarkey is really worth the candle. It's actually counterproductive, I think, in terms of global welfare.
Right.